Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, February 22nd, 2021. We'll keep it kind of streamlined and just hit on what I hit on Friday, the same things I'm watching right now, and that's going to be, we'll start out with the stock market, look at gold, crude oil, natural gas, Bitcoin, and the, crypto proxies, I call them. And I had on my list, I'm looking at the same scratch pad I did the video on Friday, and I don't remember if I got to bonds at the bottom. I had a note to cover Treasury bonds, but either way, don't. It's just as well. I'll cover them today. That I think the move, they're pricing in a move, and that train hasn't left the station, so I'll hit on that. Okay, start out with the stock market. Kind of slow rolls so far on the SPY, the S&P 500. I'm referring to the breakdown of the primary trend line that happened here a couple weeks ago. Back testing, slow rolling. Really need to undercut those recent lows. When you zoom in real tight, we're there. We're starting to crack. So here's it. Somebody asked on Friday. I just got back. Answered went to the comments from Friday's video, and somebody said, "Hey, did we get a sell signal? QQQ broke down on Friday at the close. It looked like it closed below the trend line." They said, "Well, my response to that is, it was close. It was just below, but now we're clearly below it." And so my response was, "Look, today, if we can close the day down, especially if we can get a 2% plus down day on the Nasdaq 100, it'll solidify that sell signal and greatly increase the odds that any swing shorts now will play out." And of course, if the market does its usual, shenanigans, which it's been doing for a long time, and can snap back up and recover most or all of today's losses, well, then we don't really have a decent sell signal. So there it is. So any more downside as well, I'm talking about Nasdaq 100, but here's SPY. Any more downside today, if we get a good 2% plus down day, we're down 0.68 right now, 0.68, 0.7%. So we get a pretty good move down into the close day. We'll have undercut those recent lows right there. I'm referring to this minor support. I think I showed you a dotted line on one of the videos. There it is. So we'll call it 387 or so. And the farther the way we get from that level, as I like to say, the redder the better for a sell signal. So a big red candle would be better than just a little, small, red candle slightly below like that. All right, I think you guys get the drift. Here's QQQ. Here's that trend line again. A key trend line off the March lows. Very important reaction low. Numerous reactions. One little whipsaw, and that's fine. Sometimes you get that. But the trend line was still valid with enough reactions, especially the last few days too. That helps to validate it that it's still producing reactions. In other words, the buyers stepped in there. That was Thursday, Wednesday, Thursday, and Friday. Each day, 3 consecutive days, that was a low. And that tells me those are 3 consecutive and most recent reactions, which helps to validate the trend line. And now today, we gap down. That's impulsive, number one, and we're down about 1.7% as I'm doing the video. So a pretty impulsive move. And once again, so how we finish the day, more downside, will further increase the odds. It is a sell signal now. Again, actually, when I say, talk about Friday, we parked pretty much right on it, and that's why, there was no update. So there was really no sell signal on Friday at the close. Even if, play around with the trend line and we closed a hair below it, it wasn't a solid close. So that's what I like to see. So there it is. So that's pretty much that simple. Not any more downside today, and increases the odds. And I do think once it becomes apparent to most or all, well, never becomes apparent to all, but to most market participants, that the Qs have finally broken down and SPY has broken and backtested everything I've been talking about, I think it'll be a pretty swift drop. There's just a tremendous amount, of hot air. I'm referring to excessive bullishness, extremely low put to call ratio, everything else that I've talked about for months. So those are the ingredients that usually lead to a swift drop, the kind that it leaves the media trying to scramble to pin a headline on why that happened, and they will. My word, so something to do with the stimulus, latest backpedaling on the stimulus, something to do with the Fed, corporate earnings. It doesn't matter. Let's just see what happens, price-wise. And let me give you a target right now before I move on to QQQ, because I know in the morning I often update with using the futures, and I know a lot of you don't trade the futures, but it gives us more visibility to see what the futures have been doing overnight. They open on Sunday evening. So that would be the first target or support there. That's about right about 314. I'm going to move that number up, and we'll move on and look at some other things here. There it is. All right, so 314-ish. I already posted the charts in pre-market of the NASDAQ 100, but it's worth looking at again. First target hit right there. Reaction. Second target hit right there. We had a reaction. You can see if you zoom in really close here. There it is. This is a reaction, which I expect on the initial tag of each target. So when first target was hit right here, there's our reaction, a bounce. Then we undercut it, bounced again, move back down. That keeps this near-term downtrend intact, series of lower highs and lower lows. And there's a reaction all morning. These are 60-minute bars. Same as a candle. I'm just using the bars. They show better on when I'm doing the videos for you guys. And that's 1, 2, I don't know, 6, 7, 8 candles. So for the last 6 or 7 hours, we've been trading, or more than that, we've been trading right on there. That's a reaction. I define a reaction as a pause or in other words, a consolidation or a bounce when a target is hit. And if we only get a minor the reaction comes in the form of just a brief consolidation, that's all the more bearish. And so far, that's what it is. You can see this big red, I think you can see it on the video, this big red bar right here. We're moving below all these other bars. So I think it's go time. I think it's objective to add more shorts here. If you haven't shorted yet or gotten out of your longs, I think it's objective. Take the charts for what they are. If they whipsaw us, then so be it. And if they do, remember, we've already broken down. So now there's the ball's in the bull's court to try to foil this breakdown. But there's plenty of resistance overhead. So if we bounce, you have quite a few resistance levels that we could turn back down at. But I don't think we will. I think once it becomes apparent to most that, hey, the market's rolling over, those big market leaders, let's look at those real quick and then we'll move on. Let's look at some of the big ones. Here's Apple, again, biggest top dog in the indexes, coming right up on my 1275 target. Peaked on the fourth quarter earnings and divergent high, and it's been moving steadily lower since. And that was also a whipsaw signal. The pre-earnings breakout above that recent trading range, we fell back in the trading range, and we're now to my midpoint line. My midpoint, I always say this, it's not always exactly in the middle, and what I'm referring to is that recent trading range. Let me box it in for you. It's already boxed in here, but this is what I'm referring to. It runs from down to about 106.50 and up to about 138.36. So again, I can often put a midpoint between a price channel, and sometimes that midpoint's a little bit above the middle or a little bit below, or sometimes right on. So this one's a hair above, but again, it's decent support. So the way it works is, it's where the buyers, quote unquote, should step in, and maybe they do, and gives us a back test of the trend line or even more. That's what the bulls would love to see, and I would have to say that's very bullish if we break above the top of the range, especially if we take out the top of those previous reaction highs that where the Apple reported. And if they do this, which is what I strongly favor, they break that 1275 level, it opens the door to move to the bottom of the channel, which would be from where we're at right now, roughly another 16% downside in Apple. Apple's not going to drop 16% without the market going down with it. Possible, but very unlikely due to its weighting in the averages as well as its psychological importance on the market. Microsoft finally coming back in. And remember, this one was probably the most bullish of the lot. I'm referring to the FANGs, what I call FAAMG, and now plus Tesla, so I'm calling it FANG plus T. Breakout, but it's coming back in pretty hard today, down almost 3%. That's the biggest drop in a while. Still above the breakout, so really can't, you can say where you think it's going to go, but we need to see it take that out and then take out that this is the comparable trend line to Apple, this one right here. And if it takes that out, then that would almost or most likely open the door to move to the bottom of its comparable trading range, which is about 199. So across the board, FANGs are taking some, selling pressure today. Amazon down 2%, Facebook not so much. But again, Facebook and all of these except Microsoft, they're well off their highs. They have been for a while. Tesla also peaked on earnings, divergent high fourth quarter earnings, and then broke my minor trend line. And then recently, and now today's sell signal. Remember last week we broke my 800-ish level, about 802 is where my line's at, and we were below it, but not impulsively. Now we're starting to move away from that level more impulsively. So, anything can change by the close today or tomorrow, but as of now, I have more check marks to build the case for short. So, I'm adding on to short positions that taken over the last week or so. All right, so that's the market. And of course, there's Alphabet too coming, breaking a minor trend line. They're, of course, like Microsoft, they did well after earnings. Only these two, Alphabet and Microsoft. The rest of the FANGs were sucking wind. And that's, again, a red flag for the market. Okay, that's that. Let's look at the other trade ideas. So you can short the markets. I think an index short is easy. It's still aggressive. Primary trend is bullish, and the day's not over. Maybe they buy back up, but it's the best sell signal I've seen now for a while. So take it for what it's worth. And other trade ideas, gold. I liked gold last week. Made that pretty clear that I thought it was an objective long entry here at that previous reaction low. Slight undercut, which still kept those divergences well intact. And then the fact we regained that 1770 level, the fact that we broke it and regained it, that was bullish, because that gives you a little bit of a bear trap. Not much, a bull trap. No, bear trap. Bears will short on the breakdown there. And so far, so good. Gold is up. These are gold futures. GC up 1.68%. And it wasn't just this 60-minute chart on GC. It was also the, let me get my daily chart. We hit the top of my buy zone, and that was the last time I had a buy on gold back here at the top. Once these lines populate, there it is, top of the buy zone. Top of the buy zone was hit last week. You can see right there, to the almost to the friggin' penny, just like it was back there. That has not been modified, that buy zone, since I put it on before we even fell to it. There it is. So again, objective level to step in. Gold's been choppy, but based on those divergences on the 60-minute chart and hitting support and once again bouncing off, and it's further validated. Remember back here, the buy zone was based on a support level, and that support level has been validated with those two recent, successful defenses of that level. We fell to it and held it, and then we're starting to move off it. So I like gold, and obviously if gold goes up, not always, but most of the time, the miners will go up too. So you can, if I'm bullish on gold, I'm almost always bullish on GDX, other than hard market meltdowns. We get a big liquidation type sell-off like in the fourth quarter of 2018, or what we had into the March lows last year. Miners, GDX, gold mining stocks are equity, so under intense selling pressure in the stock market, they can come under pressure. And at that point, I usually favor gold, the metal, for the flight to safety bid. But right now, we're not seeing anything like that. I mean, we could later on, but as of now, we're getting a decent bounce in GDX. So, and then silver will usually follow gold. So let's move on. Other trade ideas. Crude oil, I still very much like. It's still going up. One of my favorites right now today, and I like the fact it's up. It's up 3.14%. We broke down recently. This is a 60-minute chart of CL crude futures. You can use USO. You can short USO or find one of there's several inverse crude ETNs out there, or, which I'll get to in just a second, short the energy stocks. They're up today. Just like you want to buy when something's down. You go into Best Buy, you're looking at a big screen TV, it's $2,000. Do you want to pay full price, or do you want to buy it when it's on sale, down to $1,500? That's like buying stocks, but when shorting, it's in reverse. So if you think something's going to drop, this is, I like it right here. Let's keep it simple. We had a breakdown, there it is, of this trend line, bearish rising wedge, negative divergence, breakdown, back test, objective short entry with stops depending on where you think it's going to go. I think we'll get a decent drop. I think if the sell signals we're seeing in the stock market play out, I think we can see crude come all the way back here to about the $54 level, and that is a heck of a move if you get that. So stock market keeps going up, crude may not pull back that much, but that's a 12% drop, and 12% on CL would put quite a few pennies in your pocket there. Let me give you one other support level that's almost certainly going to come into play right here. Okay, so you can see my lines. I think you can. If not, 59.45, 58.90-ish, 58.13. More so those first two, and if they break, you know what, I'm going to do this. I'm going to give you one more. I'll sharpen my pencil here. You know, these are just little, you know, little squiggles where you get the little squiggles I'm talking about when you correct. You know, these are minor support levels likely to produce a reaction. But again, if you're a swing trader and we get the sell signals in the market and the equities start to fall, that would be that 54-ish level. I have the number at 53.89, so you know, cover a little bit above that if we get there. Okay, and that then brings me to a related trade, which I mentioned on Friday, the energy stocks, XLE poking just above, but the day is not over yet, 47.06. That's that major reaction high. It was a potential target I laid out back here when I made that first call on the energy stocks, pulling back a few weeks ago, and they did. So you know, I can play devil's advocate on this one. I can play, you know, and I will highlight, which I have been doing, the bullish scenario. There was a trend line breakout right here, perfect back test, and moving up impulsively. That's, you know, that helps support the bullish case. However, we have and we had here negative divergence. That divergence has now been extended. You can see the negative divergence down here. We're at resistance. We're just a little bit above it right now. We're at 47.93. I have that resistance level, give or take, just a hair over 47. So again, what happens today if the market sells off, you know, continues to sell off and closes down where we're at or even lower? I think that will spill over to crude and the energy stocks. I think this will be a what I call a momentum fueled overshoot. We had a lot of velocity, and I think we'll and even a little whipsaw signal. Right now, it's a breakout. I'm sure a lot of traders are watching that previous reaction high as well as this reaction right here. And so they're buying the breakout above 47. That if we fail, fall back below it, and if you go in really tight here, you can see a little cluster of candles and a gap right there. That would be, I think, the nail in the coffin. If we can fall below that this week, anytime this week, 45.30, or you know, in the next week or so, that will most likely seal the deal, give us that false breakout, and then open the door for maybe another back test of the trend line there. Again, XLE is going to depend on what crude oil does, and crude oil doesn't always, but usually depends on what the stock market does. So they're all, what I'm trying to say, if you're going to bet a short on crude and you're betting a short on equities, you're probably going to be right on both or wrong on both. So keep that in mind in your position sizing. I just think there's a little more bang for your buck in this sector than some others if we get those you know, those sell signals hold. XOP, and that was when, you know, this was where that short was a few weeks back, a couple months ago. Hit the first target there on the daily chart and the 60-minute chart. Never fell to our second target, and we have not back tested the trend line yet. And I'm going to draw a little minor trend line here. So what you're looking at on this daily chart here on XOP is the primary uptrend line, which was broken here, and we hit that 63.50-ish support. We bounced. We've been back testing, so we're still below it. In fact, if you take the divergence line, we're back testing right at the apex of the wedge, as well as that 80.35 level, which, you know, back when I did that, you know, the first video, the case for a short on the energy sector there, said, look, it's even better resistance if we get up here. This is big resistance right here, about 80.35 on XOP. Those are major reaction lows right there. And once that level gave way, we consolidated below there, couldn't regain it, and the bottom fell out. So that is a technically significant level, more so than this last one that we hit there. So one of my favorite shorts right now. And it's up 4.37% today. So, and we're basically right about, remember on Friday, if you look really close here, I think you can see we're a little shy. The high on last week, that was Wednesday, was 79.59. I have the line at 80.35, and we're at 80.92 now. So we've now hit the resistance level. And again, it's up today. I'd prefer to, you know, add to shorts, which I'm doing today, at up 4.25% right now. And look, you know, if the markets can whip back up and crude hangs in there, then I can, you know, run a stop up here. But I think there's a good amount of downside potential here on an XOP short, as much as you know, come back to that 63.51 level again. That would be a 21% drop. And if you did the inverse, which is we have drip and gush and drip. Drip is the 2 times short version. So remember, this is the well, no, this is a 60-minute chart. There is that T1 level. We broke out there on drip. We're down here, and basically we have the divergence that was in place back here when we had that rally of whatever it was. It was 23%. We have even much larger divergence right now, and I'm still eyeing that T2 level. That was my preferred target back then, and it still is. So where that would have been a 63% gain if it was hit, if we hit it now, you're talking about 114% to get there. And that's how the leverage works in your favor, especially if we get a swift correction in the energy stocks. And then the other big energy ETF I track is XES. That's the oil and gas equipment and services. And again, case was made right here at the 45.75 resistance. We got to pull back. Actually, here is that's where it was, and we're still there. That's where we are. We're still at that 55.44. That was it right there. Pull back, and we're back to that resistance level. Look, and if we go up higher, this is big, even bigger resistance at 64.30. But the fact that we have XLE and XOP at pretty solid resistance makes me think that XES will probably fail here. And again, like everything else, like the others, we have negative divergence as well. And so pullback targets 47.75, and then a back test of the trend line and or that 39.74 level below. That would equate for be good for a pullback of about 15%, 14% of my first target, 47.75, and should we come all the way for back test of the trend line and or that 39.74 level, you're talking about a 28% drop. And natural gas, I already did an update this morning. That was posted first in a comment to somebody who asked my short-term outlook. Said short entry, objective short on a break of this trend line, targeting this larger uptrend line, and that was hit. And I think it was a 5% drop till we hit it. And we've taken out that trend line, so that's not good. That opens the door for more downside. But I said last week that if and when we hit there, I didn't have a strong opinion on where we'd go from there. So my preference was just to cover and move on to the next one. But again, we broke that trend line. It's not super well defined. We didn't really have much of a reaction on there. So my near-term outlook is I just don't have a strong opinion on where natural gas goes from here. Longer term, I'm still bullish, but near term, I don't know, maybe more downside, maybe not. Just move on to the next one. Bitcoin sell signal was triggered today, and we're currently backtesting. This is BRR, Bitcoin futures. Breakdown, impulsive backtest. They're buying it up, but we're right back to the trend line. So this is an objective short entry. You know, that candle, we didn't print a red close, a solid red close below it, so it could prove to be a whipsaw, and it will be a whipsaw if we get, you know, much above that trend line. But as of now, it is a breakdown, a backtest. You could take a shot there for a short. There's big divergence, so you guys, I've already laid out my targets. That's my minimum target, 43,457. So again, short here with a stop somewhat above. Use, you know, depending on which target you're going for. If you're only going for that one, calculate the drop down to that level, divide it by 3, and that would give you a 3-to-1 risk-reward ratio. In other words, you know, risk 1 unit of loss for every 3 units of profit, or whatever your preferred risk-reward ratio is. On a related note, we have the ETFs. We have GBTC. Bitcoin Trust, breakdown, snap back as well. You know, we broke down, red candle because it's still down for the day, but we're right back testing the trend line. So same story. This one does track it directly, and again, it's these divergences that tell me that we could have a pretty big correction coming up. Not to mention the fact that all the crypto bulls are foaming at the mouth bullish lately. You know, from everything I read and hear, and that just like the stock market, when everybody's bullish, it means most people, those that are crypto fans or willing to buy crypto, they are in. They already have their money in, and then you have a temporary, you know, buying climax. We'll see. And again, divergences are not a sell signal, and these divergences are not confirmed. Confirmed will be if and when this PPO, the PPO line crosses down below the signal line, the white line here, giving us a lower high on the MACD. Right now, the MACD is a momentum indicator, and it's going up. So if we continue up, then guess what? We will not have that confirmed negative divergence. But should this breakdown stick and we come down to my T1 zone, we will, and then that sets the stage if we get this divergence confirmed for possibly bounce off there and then a move down to that T2 second target. That's GBTC. There's that Ethereum ETF. ETCG, that's where we were Friday, where I said, if I was in it, I would have sold right there and take profits. You could have shorted. That was big resistance. Expected a pullback. Said it would be an objective long entry on a pullback to 3377. We hit it and bounced today. Typical momentum overshoot, just like we had a slight momentum fueled overshoot to the upside. Same thing on today's pullback and a bounce off that level. But with Bitcoin breaking down, yeah, we'll see. Let's see how we finish the day. Bitcoin's either going to get back above that trend line. So far, it's snapped right back up to it. If it can regain it, then Ether could have another leg up. And if not, then at this 17,333 level is just a little bump on the road, a little reaction. I always expect at least a minor reaction on the initial tag of a pullback, target or support level. And so far we had a reaction. Let's see where we go from here. And again, I think that'll be largely dependent on Bitcoin. And then, as I said, RIOT is a Bitcoin proxy. The one we're just looking at, ETCG, directly tracks the price of Ether or Ethereum or whatever you call it. And that is from the same company that issues the GBTC Bitcoin trust. So those are like ETFs, if you will, for RIOT and Ether. And I'm sorry, for Bitcoin and Ether. But RIOT is going to ebb and flow with the cryptos, so it's not by mere coincidence that we had a breakdown, a sell signal on Bitcoin today, and also a sell signal to breakdown on that trend line I was highlighting on RIOT. So RIOT down 4.32. It was down a little bit more before, and where it goes from here will depend on what Bitcoin does. If the sell signal on Bitcoin sticks, that should open the door for a pretty big pullback all the way to about $27 in RIOT. So that would be from where we're at right now, I thought we're right at the top of that candle. Should we hit that target, you're talking about a 60% drop. I don't see a whole lot of support before that. Now, if we get there, it might entail Bitcoin falling to beyond my first target that I just showed you a minute ago. I'll continue to update this. So we say the charts are dynamic, and so is my analysis. So first things first, and let's see if that breakdown in Bitcoin today sticks, or if it proves to be a whipsaw signal. And then last but not least, let's talk Treasury bonds. I'm going to start with the futures, and I'll look at the ETFs for those of you that don't trade futures. But the futures are really, a better guide. Futures trade virtually around the clock, 24/7, so you can see a lot more in the charts. And what I'm looking at, this is ZN. We're going to look at just the 10 and the 30-year bonds and the ETFs that track those. Nice positive divergence right here on the 60-minute chart, and so far a reversal. And we're very oversold. I'm going to get to the daily charts in a second on Treasury bond ETFs, but I think we can get a nice lift here. And targets would be that 136, 319-ish resistance right there, and or the downtrend line, which should come in together if and when it gets there. In other words, it would look like this. It would come off to the to the right margin of the chart here. That trend line in that 136, 319 level, by the time it gets there, if it does, they should come in together, and that'd be a nice trade if you trade Treasury bond futures. If you're trading the ETFs, remember, bonds don't move nearly as much as stocks. That's, I'm only looking at about a 1.25% rally in treasuries. It leads to that minimum target. But if you trade futures, because they're so leveraged, that puts a lot of money in your pocket. And I don't have to tell you that if you trade Treasury bond futures. You already know how much they move in dollar terms for a little 1%, 1.25% gain. So that's ZN. That's the 10-year Treasury bond. And I have ZB. if I can find it down here with all my charts, CB right here. Nice big divergence on the 60-minute chart here. We had a small little divergent low right there, and that gave us a relatively small rally to that point. Put in a little divergent high so that continued the downtrend. Remember, it all started back here when we broke that triangle I highlighted a couple months back. It broke to the downside. It was impulsive, and that kicked off this whole leg down right here. That was the technical catalyst right there, that breakdown. However, we've come full circle. We've been building divergences, and each of these divergent lows has given us a little bounce. We had a little breakout of the trend line there, but right now we have some pretty big divergence that I think will play out for a nice counter trend trade or a rally in treasuries. CB, I'll have to sharpen my pencil on it and give you some additional targets, but possibly all the way back up here to that 169.205. That'd be a big move in the long bond. This is the 30-year bond, and it would come in together right there with the primary downtrend line. So that would be a move of, should we get that, about 4%. So a little bit, quite a bit more upside, and that's just a longer-term target for ZB. All right, and as not everybody trades futures or has the ability to, and we'll look at, I'll start out with the 30-year, which we were just looking at. This is TLT. What I think stands out more is go to the weekly chart here. This is a weekly chart, and that was a divergent high. It's not marked. Here was a trend line break right here. This was pretty important, and I think that was that same 60-minute triangle, yeah, that I showed you on the futures. When that trend line broke, ZB broke. What stands out right now, I don't see really a screaming buy on it. I want to say that right now. I don't see screaming buys, but I do think there's a trade to be made, a counter trend trade. If you look down here at the very bottom of the screen, we have now hit oversold on the RSI. This is the RSI 14, again on a weekly chart where it hit that blue line as a 30 level. I'm going to just circle the last times, all the other times we were oversold, and you can see what happened with Treasury. So it's not rocket science. You know, we were oversold here. We had a little bounce. Didn't go up right away, but it never went much below that. It made basically an equal low, put in a small divergent low, as a matter of fact. That's often the case. Sometimes you become oversold, then you have another little more downside, and then the reversal kicks in. But usually the bottom is not very far. That is no guarantee. I've seen oversold become much more oversold and stay oversold for a long period of time. But again, technical analysis is all about recognizing past patterns and behaviors with certain securities, and then trying to extrapolate what will happen based on what happened back then. So there it was. And again, divergent lows. So here's the thing. Most of these, I'm trying to get a line tool here. Most of these you were oversold and then became put in a slightly lower low after that, and then the rally came. Sometimes it's one and done. So my preference is to start here, start with a starter short position, and have maybe some room to add to that, whether we just continue up or we put in that lower low, you know, in a week or two from now. But again, the case that I made on the 60-minute chart says go ahead, and I think you can step in here. All right, let me just finish up. Okay, so you can see I'm just circling where we're oversold, and this goes back all the way back to 2010. That one we came very close. So there it is. You can see what happens when Treasury bonds become oversold. If you stepped in 1, 2, 3, 4, the previous 5 times over the past decade plus, each and every time you had a very nice trade to be made on treasuries. This one you put in, you had a nice bounce. It was a tradable bounce there, but then there's that second and divergent low right there. So trade 1 and trade 2, and that was an even bigger move. In fact, if you held it, you rode this whole wave up. All right, so there it is. That case is made on the daily or weekly chart. And then IEF. Usually get more bang for your buck on the 30-year bond because it has a higher duration. Duration is how much bond prices will move in response to a change in interest rates, and longer the maturity of the bonds, the higher the duration is. So you tend to get bigger moves in the long bond TLT than you do on IEF, which is a 7 to 10 year. This is comparable to that ZN Treasury futures. Same story. It's just, this is a weekly chart. oversold. Here's in a case, again, we're oversold, but oversold, oversold. So it took that third oversold reading then, and then there was a beautiful breakout of that bullish falling wedge pattern right there, and that set up that move, and that was highlighted back at the time. It was also a pullback to a support zone, and right now, see, this is support right here, 114.31. So I can see the possibility. This is what I think the maximum downside is in the near term, down to about 114.31. And that's why you might want to scale in if you're interested and not take a full position yet. Maybe add if we get down there. That's only about 1.84%, 1.75 or so to that support right there. All right, so that's bonds. I don't know if you could hear the buzzer a minute ago. I had an alert on Apple, hit 125.75, so now that pullback target's been hit. We're at support, and that increases the odds of a bounce here, a reaction in Apple. But I think it'll be, you could maybe trade it as an active trader. If you're a bull, step in, buy support with a stop below. And if you're a bear, wait for that a solid break below that level to add to a Apple short or a index short, and swing it on down to the bottom of the channel. All right, last but not, no, that's it. That's everything. I covered treasury bonds, Bitcoin, natural gas, oil, gold, stocks. That's everything. All right, guys, you know what to watch for. Let's see how we finish the day, particularly in the equity markets. I feel even more confident now about the sell signals and being short the equity markets. It's still been a very resilient trend. It wouldn't surprise me to see them gobble us up into the close. But like I said, I take the charts on face value. We have breakdowns, so short and added to shorts today. We'll add more if we get a solid close today. That'll help to strengthen the case. And Bitcoin, let's see how that closes as well, because that's we either have those sell signals or they're going to be negated. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.